for his take on today's new inflation figures. Warren, thanks for joining me. The latest figures are in. Annual inflation has dropped to 3.4% in November after that big spike in October. A little bit better than economists were expecting, but still outside that target band. What does all this mean for interest rates and the economy going forward into 26?
Yeah, good evening, James. Thanks for having me on the show. Look, I think the numbers today we've got to be careful with. It's only the second time we've had this monthly CPI, and that headline inflation number you quoted, it was down as low as 2.1% a year ago.
Yeah.
So it's jumping around a lot. But as you said, it's still, even at 3.4, above the RBA's target and a lot higher than what it was 6 months ago. That is moving away from its target, despite the fall this month. The core inflation numbers are all rising. So really what we're seeing here is an economy that's recovering. And of course, inflation has stopped falling. It never actually really got to the RBA's target and now is rising again. The logical implication of all this is interest rates are not at the right level. No one wants to hear it, of course, and we don't debate these things very well in our community. But the reality is interest rates are too low, and the RBA's really got to get on with it and get those rates up a little bit. It's their best chance of not having to raise rates a lot, if they go early.
Well, Warren, I want to pick up on something you just said a moment ago about how we don't debate these things very well in our community. I feel like in Australia 20, 25 years ago, people had a better understanding because they had gone through all of the reform process. What do Australians need to understand about the real danger of letting inflation get out of its box? I know we've spoken about this, you and I, offline before, but tell us about what that real destructive possibility of having inflation really getting out of its box would mean for the Australian economy and all households, not just mortgage holders.
Yeah, well, the first thing that's apparent to everyone in Australia right now is just how corrosive it is on your standard of living. That is, people are going backwards because their wages can't keep up, by and large, with the increase in the cost of everything we buy. That's the first thing, the cost of living. It's alive and everyone understands that. But a look back at history does not need much sort of analysis to tell us that inflation is corrosive to a free and open society, starting with a well-functioning economy. That is, it promotes speculation. It is a detraction from investment in real things like the production of goods and services. And of course, it ultimately ends up with a trust issue for the government more generally. So we have seen this story for hundreds of years, and it's amazing in this country that we are so naive and also complacent about what inflation risks are there. And Australians are more exposed to inflation than any other country in the world. That is, we are the most indebted household sector, all of it just about at variable interest rates. And of course, we don't have our personal income tax rates hedged through indexation. So we get an increase in taxes through inflation through bracket creep.
Yeah, we absolutely do. And in terms of this inflation, how much of the inflation that we're seeing there is due to the public sector not getting out of the way, crowding out the private sector, whether it's in, the housing sector or the NDIS, which is growing like topsy, or any of these other sort of areas where the government is just crowding out private job creation and productivity?
Yeah, it's happening fast and furiously, and it has been for 3 or 4 years now. It might be easing back a little bit. There's some hints of a slowdown in government spending, but we're talking about a slowdown from a rate far in excess of the overall economy to something more in line. So it's still actively crowding out a private sector that now wants to invest, needs to invest for new technologies. And of course, all of this reflects a fundamental shift in the balance in our economy with the retirement of the baby boomer generation. We've gone from an economy for 30, 40 years of excess labor, where unemployment was the problem. And now, since the pandemic, it's labour shortages. And until we, as a community, understand that, and government and the RBA understand that, they're not going to get their policies right. As far as the RBA is concerned, though, they need to set interest rates for whatever the government's doing. And if the government won't cut back on spending and free up some space in the economy for the private sector, it will produce inflation, and the RBA has to act.
And if we have a labor shortage, that means there's going to be lots of demand to keep the immigration pipeline turned on. How is that going to wind up impacting the housing market? Because normally you would expect that interest rate rises would put a damper on the housing market. But if we continue to have very high net migration, aren't we going to continue to see house price growth and an exacerbation of really that younger generation trying to get on the ladder?
Yeah, so the first point is immigration doesn't solve this problem. It helps at the margin, but only at the margin, because you might need a carpenter or an electrician and you bring them in from overseas, but when they get here, they need a hospital and a house and a road, and they need food and groceries and so forth. So you don't change the balance in the economy. The Japanese have had this issue for 20 years and they had no immigration. The Europeans went into this demographic shift and then they did have immigration, and it hasn't solved the problem. So immigration isn't the solution, but we still are going to benefit from a sensible program over the long term. But of course, we're not seeing a marked slowdown in immigration below rates that we were seeing before the pandemic. It's slowed down a bit in the last 18 months. And of course, this is keeping the demand for housing up when we are not building enough even to house everyone we've got right now. So this housing issue is not going to go away. House prices may be steady this year if interest rates go up, but I doubt they'll fall much.
Yeah, Warren Hogan, thanks so much. We're going to have to leave it there, but thank you so much for bringing some of that good debate to our viewers. Really appreciate it.